All right, good day everyone, and welcome to another JK Deal Reveal live from Mexico. That's right, we are in Mexico, and we arrived on Saturday, or was it Sunday very early? Now I forget. I think it was Sunday. We arrived on Sunday super early. We caught the red eye out of Montreal, and here we are. Nice to see you, Trina, Madri, Dimitar. Nice to see you all here. How nice of you to join us to another JK Deal Reveal from Mexico. So it's actually 4 p.m. for me, which means that this is actually really early. I'm not used to having it this early, but don't worry, I'll get through it. So I wanted to share, before we get started on the JK Deal Reveal, I want to share you how flexible one must be when you're dealing with a visionary entrepreneur like Janie. So here we were in the plane in the Montreal airport, already boarded. And you might know this about me, you might not know this about me and Janie. We separate to each other in our respective, like we stay in our lanes. I'm very system, I'm very numbers. Janie is more the vision, the direction, the social calendar, the vacations, the travel, and so forth. So she decided that we were going to Mexico. That's great. She also decides where we go, when we go, why we go, and everything, right? The accommodations, the flights, the times, everything. And I love it that way, all right? So we're in the plane in the Montreal airport, and just a minute before we start backing out of the parking spot. And I asked Janie, hey, where are we sleeping tonight? What'd you book? And she says, oh, just go on Airbnb. I booked us this place. I'm like, okay. So we still have internet. I go on my phone and I'm like, okay, I only see one booking, and it's from January 20th to February 20th. And I'm like, I look at my watch. No, pretty sure we're the 17th and we're arriving on the 18th. So where are we sleeping tonight? Whoops. So the plane backs out, lifts off, no internet in the air. So we actually landed in Mexico without even having a place to stay. Not that it's the end of the world, but it goes to show you how things don't always go as smooth as one would like, and that's perfectly fine. It's all part of the thing. Better done than perfect, right? Better just get it done than trying to always be perfect in what we do. So my little story for the day, let's be flexible. And today, on our deal reveal, we're going to be a little bit flexible as well, because we are going to get out of Ohio. I know we do a lot of deals, and we do a lot of JK deal reveals in Cleveland, in Ohio, because we do a lot of business there. We love it for long-term rental investing, but that doesn't mean it's the only place. And today we're going to do a little switch, and we're going to show you another deal that we have on the go right now that's actually in Michigan. So let us bring this up to the screen, to your eyes and ears, and see what we get. We get Facebook. That's not what I want. Okay, I've got a lot of tabs open. Let me just organize myself. There we go. Okay, so today's deal reveal. There's actually quite a bit of people on the call that I think it's the first time. So let me just take the time to explain to you why we're getting excited here. These JK deal reveals, the point is, and it's so important so we don't get stuck in analysis paralysis, we need to look at a deal, scan it, and get a good idea. Better done than perfect. You're going to get an 80, 85, maybe 90%, maybe it's 100% view of the deal in terms of accuracy, but you're going to do it so lightning fast that you're going to speed through the competition. You're going to be the first one to be able to do it that quickly, get to the point where you can negotiate, put it under contract, and then you have all the time you need to really make sure it's a great deal. But you didn't get cut in the process by someone who's faster, quicker, better doing the numbers than you. So we're analyzing deals quickly in markets like Cleveland, like we're going to see here that we're actually going to go into Detroit for this particular deal, where the numbers are just 4 times better than in Canada. For half the price, you get double the return. This property right here, which we have under contract and we're looking to close in about a month, is an 18-unit apartment building that is fully occupied, turnkey, okay, 530,000. Try to find those numbers in Montreal, Toronto, Vancouver, or in most places in Canada. You will not find those type of numbers. And then we're going to even take a look at the cash flow behind that. So we're investing where the numbers make sense. And that's the deal reveal. I'll remind you that we are always looking, is this a deal or is this no deal, or is it a potential deal, right? So just have that in your mind as we get started here. so that we can have a conversation at the end. So, whoops, I didn't want to do that. Let's start over. Okay, so how do we analyze a deal? How do we do that? So first, we're going to go into the Google, and we're going to type in the address of the property, and we're going to follow it with the word Trulia. Okay, why are we doing this? So we get a sense of what the area is. Now you might hear Detroit or you might hear Michigan, you're like, oh my goodness, no way, never going to touch that. Well, hold up, right? Just like Cleveland was, 7 years ago, we saw signs of the market picking up. We saw signs of, the economy coming back and prices being ridiculously low. And so let's take a look. We have here a gray, which is the lowest crime, surrounded like a block or 5 or 10 blocks away by moderate crime. So this is beautiful in terms of crime. You see, it's on the outskirts of more active areas. And if you do a little bit of due diligence on Detroit, East English Village is one of the 4 areas in Detroit that is actually getting a lot of investor attention as the next up and comings. So we're nearish. Okay, it's not in right there, but we're nearish. So there's some short to medium term opportunity for just natural appreciation, inflation, and gentrification. So that's pretty cool right out the gate. Okay, so we go to Trulia. I like the crime very much. So what I'm going to do is I'm going to take the address here, and then I'm going to go in Rentometer. Okay, I want to take a look at what the rents might be for this property. Okay, and I might be out of trials for this. Let me see. So let's just go in here with a 1-bedroom. I'm out of trials, and unfortunately, I won't be able to. I'd have to. Here's a trick. Here's a pro tip. Change your VPN. If you have a VPN like ExpressVPN or something, switch it to a different region, and then your counter will reset in Rentometer for free. So pay for the VPN because it has a lot of other benefits, but don't pay for the Rentometer. Okay, don't tell the Rentometer reps that I say this, but it's a way to hack the system. I can't change the VPN right during our live because it's gonna mess up with the stream, unfortunately. Okay, but I would go here to find out what the average rent of a 1-bedroom apartment is at this area at this zip code. It would give me some good comps. Okay, because with this property, the sellers actually had an executive summary to prepare. They presented this, which was a portfolio of one 18-unit apartment building. This is a picture of what it looks like, and 2 single-family homes. And we quickly looked at the numbers, and we said, nah, just forget the single family. Let's just focus on the 18-unit. And so we did. And so let's just take a look at what the 18 unit's all about. Well, they're advertising at a 13 cap. Again, this is the seller's numbers. It's 18 1-bedrooms. They said that 12 of them are going to be taken by a government subsidized rent program, 12 of them with D-Life. Never dealt with this program before, so we're actually doing due diligence on the program, and we're seeing what all that's about. And then there's 5 that are basically cash tenants, and 1 that's 50-50 with an on-site manager. It's 1.5 miles away from the new Chrysler factory that's going to employ 6,000 people. So we're seeing that Detroit, the area, employment is getting better in general. And then it basically says what they did at the property. The roof was done, the floors, they painted, they did a whole bunch, bathrooms, kitchens, plumbing, electricity, Wi-Fi, and windows. So they did a full, they're doing actually a full rehab, and they're selling it turnkey. They're basically flipping the apartment building. They're apartment flippers. And they were advertising it for $589,000, which is what gave a 13 cap. Okay, again, these are their numbers. So let's just take a quick look. So we have our 18 units with the rents, $650. Now this is what we would have compared to Rentometer. And if we see that rents are lower than Rentometer, we'd ask why. And if they're higher than Rentometer, we'd ask why, right? It would be a discrepancy in our assumptions. So they have management fee, insurance, utilities. Electric seems to be paid by the tenant other than the common areas. Internet paid by the owner. Trash paid by the owner. Maintenance, property taxes, and then they go into net cash flow per month and per year. So if we go through Summit, is there anything missing? Summit, S for shit. You'll never see that on their report. This is your own personal buffer for permits, licenses, oops, budget, whatever. And it's normal that you don't see it here, but just keep in mind, it's the first step to get to the summit. Next, utilities. Yep, water, gas, electric, trash, they're on the report, so I'm not expecting they're hiding anything, but we're still going to verify these numbers before we buy. M, next letter of summit, we have management. Where is management here? There it is, 10%. 10% is perfectly reasonable. And next, we have the maintenance. Where's the maintenance budget? Okay, there's $9 a month per unit on maintenance. Is there anything else on maintenance that's hidden? No. So although it's there, it's a very small maintenance budget. So I would expect closer to $50 a month per unit. Not every month that you're going to get a $50 maintenance bill, but over time, eventually changing the furnace, changing the hot water tanks, changing the roofs eventually, just factor that in up front in your long-term CapEx and maintenance budget. On an apartment building, $50 per month per unit, just as a rule of thumb, will get you there. So they're pretty skimpy on the maintenance budget. Now we know. Next letter, I, insurance. Yep, the insurance is there. However, $700 a year in insurance. That's a little flag. We submitted some quotes. The first quote I got back was $15,000 to insure this. All right, so we're on both sides of the spectrum. They got it for 700, and I'm getting quoted 15. They're both completely wrong. So I submitted a couple more insurance applications with insurance brokers, and I got one back at 3,200, much more reasonable. Okay, but you see how just getting a sense, you see these numbers very quickly right out the gate. Next, summit. Last one is T, taxes. Where are the taxes? I saw them earlier. There they are. $828 of taxes. This is per month, and actually, insurance. This is per month. My bad. That makes sense, right? We actually got a lot better insurance numbers than $700 a month, which is basically $8,400 approximately per year. So we're doing better on insurance, and the property taxes as well. They quoted $830. But when I looked in county records, this number is actually including some fees and interest and penalties that the previous owner before them didn't pay their taxes. And so they had all this interest and penalties. But the actual base taxes for the building are actually much lower than $800 a month, which is almost $10,000 a year. We're closer to the $6,000 range. Okay, so overall looking good, wouldn't you agree? They're advertising a 13 cap. I can do better. I only knew this after the fact, but I know I can do better on insurance. We're doing better on taxes, maintenance. No, that's a little skimpy, and our S, we're going to buff it up a little bit. Fantastic. So, regardless of this, are you comfortable buying a 13 cap? That's one question. In the conversation, in the negotiation, we didn't say what our numbers were. We didn't put in a price. But at some point in the conversation, they asked, well, what number do you want to see there? And we said 15. That's how simple it was, right? Because he asked, and the property was already being advertised at a 13, 15 is not that much of a tall order. And so we just reverse the numbers from a 13 to a 15, it went from 589 to 530. And so we sent the paperwork pre-signed. They signed it. We've been under contract ever since, and now we're doing due diligence. Now, the beauty of what just happened is that we were very clear, and they asked us, and we were very clear that we were buying a 15 cap. And so if in the due diligence process, something is just totally misrepresented here, turns out we can't get the insurance at 3,000, we have to do 15,000. It totally changes the numbers. Well, it won't be a 15 cap anymore, but we were very clear that we're only buying a 15 cap. And so that gives us a posture to go back and say, look, it's not a 15 cap. We buy 15 caps. So help us make it a 15 cap, help us make some calls, give us referrals, decrease the price, do something creative, maybe hold the seller second, let's do a land contract, a master lease with option, whatever you need to do to make your numbers work, at least you're in a position to do that moving forward. So So basically, we have a guaranteed 15 cap. Either we buy it at a 15 or better, or we just don't buy it. That's what this accumulated to. Now, at this point in time, I still haven't verified the utilities. We're reviewing the management contract because the management company that we're looking to hire has 10%, but they also have all these extra little garbage fees. My God, there's a whole bunch of fees, and they had all these special names for them, and they're slipping my mind right now, like a processing fee, application fee, setup fee, surcharges on subcontracting work. If you file an eviction, they have a flat fee, but that's normal. But then they had a witness fee, so that they go to the courthouse on your behalf. There was an extra. They'll pay your taxes for $25. Like, that's just an extra fee just cause. Like, there's all these little fees. So when you're dealing with management companies, 10% is typical in the residential and the small multifamily space. Now, 18 units is starting not to be small. So on that basis, you might get a 9 or an 8% based on relationship. But just be careful. There's a big difference between a 10% flat and a 10% with all these auxiliary fees, accessory fees, garbage fees attached to it. So you'll be sure that I'm going to communicate with them, that I'm going to say, look, when we buy apartment buildings or mobile home parks or, anything with above 10 units, we're in the 6 to 8% management realm, plus garbage fees. Like, if there's all these extra fees, we're in the 6 to 8% range. That's why we prefer to just pay 8%, maybe 9% flat. Are you okay with that? Or maybe 10% flat. We're okay with that. Everything is negotiable. But a 10% plus all these fees, I'm not comfortable with that. I actually ran the numbers, and conservatively, with all those little fees and just knowing how much maintenance and just extra stuff that happens in the management that they would charge us for, we're in the 12 to 13% on management. Makes a big difference. You're adding 2 to 3% off the gross, so it affects your net even more. So anyways, that's what I wanted to say here. We have an 18-unit apartment building, 15 cap, yes, in Detroit, but we're basically positioned ourselves to either have 15 or better or not buy it at all. So let me hear what you think here. Is this a deal or a no deal? Dom in the comments says there's missing reserves. Yes, you're right. There's missing reserves per se. Now, this is it's not a cash flow calculation, but you'll remember what I say about reserves. This building, although we're buying it for $530, is probably worth about $800,000-900,000. And we're going to tweak it a little bit, and the value is going to go up. It's probably going to be worth around that. So reserves, you want to have 10% of the asset's value just liquid in backup. So if you're buying it for $530 and it's worth $800, say, then you'd want $53,000 to $80,000 liquid available in case something were to happen. This is not a lift project. This is not a fix and flip project. We're not doing any renovations. It's actually part of the agreement that they're delivering this fully tenanted with these numbers turnkey. So we have nothing to do. And so there's no rehab consideration reserves, but just because you're buying something of this size, have $53,000 to $80,000, 10% of the value, however you want to, just know that you need some kind of reserves to have this deal comfortably in your portfolio. Angelo says it's a deal. Excellent. And it can only get better from here. That's the beauty of it. What does everyone else think? Is this a deal? A deal? Or is this a no deal? Let me know. Angelo, Dimitar, Dom, oh my God, I lost my thing. Donnie, Lenford, Louis, Madri, Moyo, Raj, Rocco, Sinelli, Sergio, Stefan, Trina, Wendy, tell me, deal or no deal? Would you put your money on the line for this? Lenford says deal. Wonderful. Excellent. No deal, Trina says. Okay, and that's fine too. Everyone has different criterias. Wendy said miss some, but appears to be a good deal. Fantastic. Excellent. Well, we think it's a deal. We're moving forward with it. It's under contract, and we'll see if it ends up being a real deal or not. But if nothing else, it certainly has some very good potential up front, and only time will tell if it'll close the finish line or not. So that was it. This was another JK deal reveal. Hope you enjoyed. And apartment buildings are different than residential. You'll notice I didn't go to Total View Real Estate. I didn't go to Zillow to check on the comps to make sure I'm buying under market value. And the reason I'm doing that, I didn't do that, is because the value of a multifamily unit, a multifamily apartment, mobile home park, anything that falls under commercial lending, the value of that from a lender's point of view is based on the net income it generates every year. So the value is based basically on the cap rate, as simple as that. Yes, if you're in a market where things are trading at a 10 cap, you're basically buying it under market if you're buying a 12 cap, if you're buying a 13 cap, right? If you're in a market that trades at a 5 cap, at a 3 cap, let's say you're in San Diego, California, 2-3 caps. If you're buying at a 6 cap, you're buying under market value. You're probably not buying cash flow, but you're buying under market value. So that's only one of the 2 golden rules of real estate. Here, we're looking to buy this at a 15 cap or better. There are basically no markets as a whole that just trade at a 15 cap. So I know I'm buying under market value. And then we just look at this for the cash flow. Clearly it has cash flow buying this type of a property. So the 2 golden rules are respected. It's up to you if you decide you want to be in Michigan. The lending laws it's harder to find a lender in Michigan. So if you have private capital, if you have capital, you have partners with capital, makes these type of deals a lot easier. But nonetheless, it's your choice on where you want to invest. Do it where the numbers make sense for you. So again, thank you for your time. Hopefully you enjoyed this JK Deal Reveal. I will be with you next week. It will not be a JK Deal Reveal next week. It will be a full-blown training on mobile home park investing, and we'll be in Mexico in a nicer condo right over there. I'll try to share the view of the Pacific Ocean with you here. And until then, enjoy your week. Have a great one. Go get your deals. This is the time now to get started. Hopefully you've started to see deals on our Facebook page. People are getting deals right now. This is the time to get started. So without further, just take it easy. Enjoy. Love you long time. Now for tomorrow. Cheers.